Okay, very good morning. Tuesday the 24th of January. Let's get the briefing for this morning underway. We've just heard some data come out from Germany. The January manufacturing service PMI is pretty solid on the manufacturing side. That was in line on the French reading that came at 8 o'clock this morning, but the service French number did exceed expectations. So fairly healthy readings. We'll have a look at those in a bit more detail shortly. But looking at the overall setup of the various asset classes this morning, you can see on my chart shared, not a great deal of movement, I would say. Probably because yesterday we had a very quiet calendar day, but today certainly things are going to liven up. Not only have we just seen these European figures coming out, we'll get the same coming out of the US this afternoon, alongside some housing data, but more importantly, and we'll talk about in greater detail shortly, is the Supreme Court ruling on triggering of Article 50, which will be later on this morning. But just taking a quick look, as I speak, the DAX just touching on fresh lows, but pretty flat overall in the session. Likewise, the S&P just pretty much glued to that pivot level in overnight Asia trade, fairly confined tight range there. So Bunds marginally negative, but have found a degree of support around pivot at the 163 handle. And in the currency markets, completely flat in euro dollar, with both major pairs sitting close proximity to pivots as well, respectively. A little bit weaker though since Europe have come in the major pairs. They've grinded lower in a fairly slow fashion as the dollar has come off its most depressed levels that were seen late yesterday. With the Dixie this morning, that's the dollar index trading up around 0.3% at the moment. But let's get down to the nitty-gritty of it, and that is, of course, the Supreme Court ruling, which we're looking out for the UK today. If I just extend my chart for the pound at the moment, just to put it in a bit of context of, well, really that big move that we had on the back of a combination of the Theresa May speech last week and the inflation readings, we found a bit of support around that, or just sub that 123 handle, and then we've just continued to move higher here. We're now up at the 125 mark going into today's announcement, which undoubtedly will create a lot of intraday movement. Now, let's quickly have a review of what it is exactly that we're looking at today. Then also I want to quickly show you the chart on how things reacted back in November of 2016 when the UK High Court made their decision, because I think there's definitely something we can learn from the way that the news was delivered and its timing and associated price movement. So UK Supreme Court today rules against her. The Prime Minister Theresa May plans to rush a short bill through Parliament to trigger Brexit by her self-imposed end of March deadline. So the way this will work is the court's 11 judges are due to give their verdict on a government appeal against the High Court decision that we just spoke about. That May should seek the approval of lawmakers before formally starting Britain's withdrawal from the European Union. Timings wise then, in terms of what we're looking at today, the ruling will be announced shortly after 9:30. So essentially their session begins at 9:30 AM this morning in London. But the session is basically expected to last just 5 minutes, and then they'll give their verdict. A win for the Prime Minister would let her trigger Brexit unilaterally by invoking Article 50. Defeat, though, would raise the risk of delay to her timetable should legislators slow down the passage of any motion or bill by attaching amendments. That was one thing, if you remember the article we were reviewing from the weekend's press in The Observer, where they were talking about even some Tory members clubbing up with the Green Parties, Labour and the Lib Dems to then potentially try to sculper any deal getting pushed through quickly if she tries to rush through a short bill through Parliament. So let's have a quick look at a breakdown of what exactly it is that we're looking today. And I saw a nice summary from the FT which really breaks it down into 4 kind of scenarios, and like during the news lectures that I would have delivered to you guys along the program, tackling any of these type of big scheduled market events is just about looking at different scenarios that could unfold, assigning a probability of that particular route occurring, let's say, or result, to then define on how you would tackle trading the asset in question, so sterling currency, under each specific scenario. So going through them one by one, let's have a quick look at those. First, a government win. This means the Supreme Court declares that it is open to the Prime Minister to make the notification without parliamentary approval. Theresa May thereby takes control of the timetable and there'd be no legal or constitutional barrier. If that were to happen, that would obviously be against what the High Court had already ruled. That would be short cable for sure. Because then this commitment that we've heard just last week, this hard Brexit line, would mean that essentially she has the power then to follow through and deliver under her own timings and terms. And that would be a definite negative for the sterling currency, given the fact that cable as well, if you think back to early last week, we were trading and testing 120 to the downside, which was an over 3-decade low. We've since that point rallied 5 points, so over 500 pips. So what I'm saying then, there's plenty of room to the downside, I would imagine, in that scenario where the government wins. Now, that is probably one of the lowest probabilities of that occurring today, but is not by any means impossible with a situation that could unfold. The second situation, a government loss on the parliamentary approval point. This means that the High Court decision is upheld and Mrs May has to bring a bill before Parliament, though there is little doubt that the bill will ultimately pass in the House of Commons. I would guess this is kind of the status quo, if you like, and this would probably cause a degree of volatility, but nowhere near as much as situation number one that we just discussed. Because in this second scenario, it means that keeping the March deadline would still be possible, but it would be outside the government's direct control. This is kind of what she was intonating towards in her speech when she was saying that both houses would get a vote. So she's already kind of bedding in point 2 as the most plausible. So therefore, the most probably that the market has already priced in. Hence, sterling appreciation over the course of the last week, because if both houses get a say, then it kind of, the belief is that it would soften not just the timing, but potentially further down the line then the shape of the deal that gets done. The third point then, a bad government loss on the devolution points. Now this could be in addition to or instead of the need for parliamentary approval. In either case, it would mean a potential considerable delay in the process, not least because of the upcoming Northern Ireland elections. The outcome is less likely than the two just discussed, but the government was rattled by the devolution arguments at the appeal hearing. What this essentially means, this devolution point, to just give it a bit more clarity, is essentially means that if the court rules then that this needs to then be ratified by each of the parliaments independent of each area within the United Kingdom, so Scotland, Northern Ireland and so on, which obviously are very anti-Brexit. Actually, there's a headline that I read this morning just showing with you in the Independent, Irish politicians, that's Northern Irish politicians, prepared to block the EU withdrawal if Supreme Court ruling gives Stormont a say. So Stormont, their parliament. So they're already being vocal that if that were the case, and this devolution point means that the government essentially has a worse case loss, this then could lead to severe delays and disruptions. That means that triggering at end of March then comes under question. The fourth point is a reference to the European Court of Justice, the ECJ. As it's written here, it should be somewhat amusing, but it's less likely than the above three. This is probably the least likely. This is about specifically the point about the revocability of the Article 50 process. So this is highly unlikely to happen, but essentially it pivots on the legal point about the ability after it's triggered to be revoked. If that was then brought up as a key issue, of which it was not in the High Court ruling, then this would basically then be passed on, and this is where the amusing part comes, is that Europe would have to say on how it goes. So that's probably the least likely. If that were to happen, minimal probability, it would mean that there would be substantial delay of months, if not years, before we even triggered Article 50. In that case, I would imagine that actually the sterling or cable would rally probably very aggressively, because this completely disrupts the plans for Brexit, in the near term at least. So looking at these, again, just to recap, point 1 would be outright most negative sterling currency. Point 2 is the most kind of continuity to the present situation. Point 3 would be, I would say, sterling positive, but to a lesser degree, maybe given the fact that there'll be some uncertainty after initial spikes that might occur because of the fact that other parliaments will need to vote. And point 4 would probably be most sterling positive, given that then Brexit pretty much becomes off the table, at least in the near term. Now, looking at what Deutsche Bank have said this morning, because it's good to get other points from analysts who have assigned the probability of these things occurring. They've put scenario 1, the government loses appeal but wins parliamentary vote on a narrow Brexit bill. Remember, this is kind of the most plausible scenario. In this case, I would say you might see a mild kind of relief rally in sterling, given that the fact that then Parliament, well, the government has lost essentially, and Parliament gets a vote. So it just ratifies what we've already known. But I'd say, given the upside that we were talking about with the way that the pound's moved over the last week, a lot of that has already been priced in. Scenario 2, the government loses appeal but loses parliamentary vote on a narrow Brexit bill. Snap election, then most likely outcome. Now, I guess you've got to question the appetite for snap elections in terms of Labour pushing for that. Would they want to, given that they're highly unpopular, I would guess, at this particular political point in time? Scenario 3, the Supreme Court rules that devolved authorities must be consulted before triggering. And then we go on to ECJ opinion consulted. Deutsche actually given that quite a high probability, 30%. So either way, you can see here with the percentage splits, they're fairly evenly split. The one that's most expected, actually at 50% in their view, is still, for me, certainly not a done deal. That just means then volatility will be seen for sure when this comes out. Now, I managed to dig this out from a retrader game that I did, which, if you wanted to practice for this, it is available on the retrader app. But this was a 2-minute candlestick chart here of the UK High Court ruling, which came out just after 10 o'clock. Now, the bit that I really want you to focus on is, forget about this move here. This was when the Bank of England had their actual rate decision and made some quite hawkish comments. What I want you to focus on is the first spikes that you're looking at here. What happened here was, we were waiting for this announcement from UK High Court at 10 o'clock. Now, the only thing is, there is no set announcement. These are guys in the High Court discussing, then they give a verdict a few minutes later. There's no definite second predefined release time. That means then that the market dries out of liquidity because no one wants to get caught the wrong side of a decision on the announcement. So therefore, you start to see some really volatile price action. Then, actually, the market started moving higher, i.e. sterling appreciation, cable going up, even without us knowing anything. The bid, the sharp spike in cable actually occurred, probably I'd say about 10 to 15 seconds before the actual news and verdict came out. A lot of that, obviously it went the right way in terms of it went against the government. That was seen as a sterling positive in that High Court ruling. But a lot of this was, you could have traded it one of two ways really. And it was either being ultra aggressive and essentially you're taking a bit of a high risk strategy, reading the tape if you like in the price movement and going with the momentum, because at that point you want to be getting into the price movement right at the early parts of the move, or you enact caution and you actually stay out of a lot of the noise until you see the concrete result of the verdict come out, and then play the market move accordingly thereafter. Now the interesting thing here is that spike, obviously being that ultra aggressive, does suit generally more experienced traders like will feel more comfortable with that. But for you guys, actually a lot of the trade here was when it pulled back, and then the minutes after, once the news got digested, then we rallied back up to the actual highs. So it came back down, then moved higher. So just be a little bit careful, because today's release from the Supreme Court is going to be exactly the same, whereas at 9:30, that's when they go into session, and there's believed to be an approximate 5-minute period where they're going to discuss, and then at the end of that deliver their result. I would imagine similar type of very volatile price action. So just be careful on how you approach that, but if you take that decision early on, then you need to be committed to it. Otherwise, I suggest staying out of that initial noise and then looking to re-enter upon a technically sound level thereafter, maybe in the following few minutes. Okay, so that's the pound situation. I've spent a lot of time talking about that because I feel that's going to be most likely the market move of the day and the most tradable event. So I'm just going to quickly run through some of the other things to be aware of for today. Just had a quick question here. Does that mean that somebody knew what the news was, hence the spike, or just speculation? This is a situation, I think, which is more to do with the fact that people are seeing the price movement and the momentum in one direction, i.e. in the upside in cable, and they've just taken the risk that that's the way that the verdict's going to go and it's going to support that move. So obviously it's highly high risk strategy, but high reward in that sense. Okay, a quick look at some other things just to be aware of, and there are definitely some dollar related comments. I've mentioned at the beginning of this briefing the dollar index is up around 1/3%, so it's seen a pretty nice bounce this morning, but certainly there's been some pretty punchy comments coming out of the US on a fairly sharp focus on protectionism, as was expected from Donald Trump and his camp. The US Treasury Secretary nominee Stephen Mnuchin has told senators that they would work to combat currency manipulation, would not give a clear answer on whether he views China as a manipulator, but almost more importantly, said that an excessively strong dollar could be negative in the short term. So if you remember, last week Donald Trump said something similar. This is now being ratified by his team, so it's definitely a verbal communication tactic that they're using here. Just to show you the move, the comment here came out on 9:30. That was when it hit, saw some volatility, but generally that comment, that reaffirmation of calling the dollar lower by the US administration, prompted the dollar to sell off overnight. Psychologically, before this bounce, that we overnight, to be aware of, we broke 100. Now 100 obviously is a big figure and a barrier just as a round figure, but if you look at 100 here, what I'm showing you is a longer dated dollar index chart, and you can see just generally the importance of the $100 level, or the 100 level I should say. You can see that it really defines the resistance through 2015, both at the beginning and end of that year, also at the beginning of 2016, and then when we broke it late last year, it really excelled the move to the upside. Almost we broke it, came back, and then we tested and moved back up to around the 104 level. So 100 definitely is an interesting level in the Dixie to be aware of. On a correlation basis, one thing that is becoming quite clear actually over now that Trump has taken over is the tightness of the correlation between the US dollar and the Treasury yields. You can see if we were to go back into 2015, it's fairly loose, but as we've gone through really the course of the second half of last year and into January, this has tightened up, and so I'd be looking at playing that correlation in regards to if I was looking at dollar strength and then appropriate moves occurring in US yields to play the T-note strategies as well. Other headline news just to be aware of this morning. Obviously we've had these manufacturing numbers, and as you can see here, German manufacturing starting the year with a bang. The PMI in Germany, 36-month high. If I scroll down, the French business in a bright spot, PMI is at 67-month high. Don't forget, we're talking about a European situation where we've got an extended period through this year of quantitative easing. ECB, though, mindful of rising inflation, but don't forget, if the underlying state of the economy starts to rapidly improve, that could also bring forward the idea of ECB taper, certainly as we go into the middle to second half of this year. But some pretty solid numbers from the Europeans this morning. The other thing as well you've probably caught in the news was BT shares. They've got absolutely slammed this morning. They were down over 16%. Profit warning, the worst drop since 2008. So if you think about it, you've had Next retailer profit warning, BT. This is to do with they estimated the impact of their accounting scandal at their Italian unit, profit warning. Pearson last week, profit warning. These FTSE UK related companies post-Brexit are starting to feel a bit of a pinch for various different reasons. That with expected weakening of UK economic growth as we go through the period of 2017 will keep things very interesting, given the fact that this FTSE has been more recently at these elevated record all-time levels. So that's pretty much the state of play in terms of the news flow for today. Obviously we've got around just over half an hour until that UK Supreme Court verdict hits. I would say that should define much of the focus for this morning. Be a little bit careful, as I was saying, with the way that this comes out, given the fact that you're likely to see a lot of movement prior to actually hearing the result. Now, decision needs to be made. Do you want to buy into the movement and believe that that's going to be validated? But again, that comes with a high degree of caution with the risk associated with such a trade. Otherwise, awaiting to see how it plays out. But I would imagine that there's greater room, I would say, given the recent movement of cable pair to the downside. And if you remember, the biggest downside catalyst would be a government win, i.e. we get the opposite verdict of what the UK High Court had, and the Supreme Court declares it's open to the Prime Minister to make the notification without parliamentary approval. That would be an instant sell in terms of cable. Rest of the day though, we do have some US economic data coming out later, just so you're aware. As far as the UK data that's concerned this morning that comes out along with that verdict at 9:30, I would completely disregard the public sector net borrowing numbers. They'll be completely overshadowed. In the afternoon, you've got manufacturing PMI in the US, so they're equivalent to the readings we've had for Europe this morning. Richmond Fed manufacturing, existing home sales, and the API inventories aftermarket as per usual. Okay guys, going to leave it at that. So good luck with that UK event coming up in a short while, and enjoy the rest of your day. I'll see you in the chat room.